Welcome to Investors Insights. We've got a lot going on this week, a lot going on in Washington as always, and a lot going on globally. But first, I want to give you an interesting fact. So guys, going back to 1945, there have been 27 years where the S&P was up in January and February. And all 27 years, the market ended up for that year. Now, no guarantees as always, but that's a very interesting fact and very positive if history repeats itself. So
definitely. Yeah.
No guarantees, but
I like
that's
the
an interesting
odds.
fact. So yeah, odds are in our favor for the year. So, but yeah, a lot going on in Washington. Trey, talk about that a little bit.
Yeah, this will be a big week. Starts today with the president delivering to the departments the budget, which kind of gives a roadmap. It's not law by any means, but it'll give everyone an idea of what the White House is expecting. There's expected to be defense increases and cuts to agencies like the EPA. So that'll be very good to see kind of what their plan is for the coming fiscal year, and then also the president will be speaking to Congress on Tuesday. It's going to be very much like a State of the Union, not really a State of the Union because it's hard to say what's happened in the last year, seeing as he just became president. But it'll be a very important speech, I think, watched by a lot of people and the markets very closely, as we've seen since the election.
But hopefully we'll get more continued clarity on the policies going forward. That's very important for the market.
Right. I think we've talked about it a lot, that tax reform, that's what the market's watching.
Yeah. And how he's going to rank it.
Right, definitely.
How he's going to rank it.
Actually, talk about globally, a lot going on globally.
Yes, to sort of piggyback on what Trey was saying about looking at some of that type of reduction in regulation. We were looking over the weekend from some data at the Heritage Foundation. They publish each year what they call the Index of Economic Freedom worldwide. They've done this since 1995. And what they do is that what the Economic Freedom Index means is that how involved your government or uninvolved your government is in your citizenry and your business. So for example, if you've got a lower tax rate, in your country, it's more economic freedom. If you've got a higher tax rate, less economic freedom. What's interesting this past year is that of 100 countries reporting, you had the vast majority of those having more economic freedom. 49 of that 100 reach highest score they've ever had. Most of the nations in the Trans-Pacific area, really Korea, Japan there, showed a big improvement of that. Even China and Russia did, and they're still far below the West. The only country, or one of the few, that showed less economic freedom was the United States. So what's important about that economic index is almost directly correlated to how much you grow. So if we can reverse that a little bit, maybe with some of these regulations being smaller, Trey was talking about, we'll begin to catch back up because the rest of the world has kind of been moving in one direction. We've been moving sort of the other way. We could probably use some reverse, perhaps.
Yeah, so a lot of strength here domestically.
Yes.
I think globally we're starting to see things really turn around for the positive.
That's correct.
And so that's really neat that for the continue to see the market continue to go up. That's
Yes.
very positive.
Yeah, make it 28 out of 28. Man.
Exactly. We'd love to see that. So thank you for watching. Please follow us on Facebook, Twitter, and LinkedIn. And please call us with any questions as always. Thanks for watching.